Before I get into some put sells, selling some puts, I wanted to look at some trade action here. What type of management should I consider at this very moment? So AbbVie, we'll let that go for now. We'll need to roll that between now and Friday unless AbbVie turns south, because it is up again today and it's at 164.17. Whoa. So getting more and more costly to, if we wanted to buy that closed, we'd have to pay approximately $525, and that's just per contract. So double that costs about $1,000. But we will let that ride for now. AMD, let it ride, let it ride. Caterpillar is riding. Devon, still be very expensive to close this position, but we're just fine as far as total profit because we've rolled this thing so many times and collected premium every step of the way. Maybe we will close that. What do you think? What do you say there? So it would be 3 contracts. 3 contracts, 33 each, for a total of $99. The last roll alone was $105. Total, we're at over $1,300 collected in options premium. So let's go ahead and just take it off the board. Let's do it. You could take it off the board. Yes. Or should we roll it? See me rolling. They hating. No, let's just close it. Release $15,900 in collateral. And take it off the board. So there it is, off the board. Move on to the next. Saw a few things on here that I'd like to manage right now. Here's one of them. The Google $97 put. Currently, Google's trading at 106, but they report tomorrow. It should be just fine, but I don't know. Why not just take the trade off? I collected $140 on April 17th, so that's just 1 week ago. And let's see, what do we need to do? We'd have to do 29 per. So $58 bills. We'll take that off the table, releasing $19,400 in collateral. And why hasn't that? There we go. All right, so that is done. But let's just do that fancy math we like, because this will be an easy equation. 40 collected a week ago minus $58 is a net profit of $82. It was on the $19,400 collateral. So we will divide it by 19,400 and we get this number, divide that by the number of days, which is 7, and then multiply by our annualized 365. So we still, with buying that closed and paying $58 to do so, we still met our minimum 20% threshold on our annualized returns. So, as the great Bill Murray said, we've got that going for us. Now let's move on to next. Should see our number on buying power go up again right before our very eyes. Hold our breath, and there it is. We've crossed into the $2 million mark. What else we got? I know I've already checked Ford 100 times when their earnings is, but I don't think it's this week, right? Let's see. Let's check Ford on the earnings here. May 2nd. So yes, that's next week. I would imagine we're good there, even though Ford is down again today. Our Valero 124 puts are just under pressure, taking some real heat. But Valero is up today. The Coca-Cola $63 call. That's showing it's up, but that's only because we've rolled it. We have rolled it because at this moment it would be called away. So we'll watch Coca-Cola. They're up nicely earlier today, right at the open. So we'll watch Coca-Cola. We'll leave it on the table for now. What else do we have? I know that I want to go ahead and dump this Mo money, Mo problems. When is Mo reporting? Did they already report? I don't think so. I know Philip Morris did. So on the 27th, Big Mo reports. So let's take that off the table now. It's 93% in the profit. $44 put, $4 left to close it. We collected what? $64 when we sold the contract. So that'll release $4,400. And when was that? April 6th. And today is what? Today is the 24th. So that is 18 days. Quick math would be what? $60, right? $60 net profit divided by the 4,400. Okay, this equation. 3%. Is that correct? Yes, it sounds right. What's today again? 24th? Yeah, that sounds right. The 24th. So then divided by 18 equals this, multiplied by 365, and that equals 27.6% annualized. We will take that all day, and that's right, twice on Sunday. A couple more dollar bills into the buying power coming. Okay, so this SPY credit spread is 80% in the profit. I am not afraid to close it out and put the money in my pocket. And we just traded this on which day? April 19th. And we collected $210 for doing so. And we can close it right now for 50. Close it for 50 and pull that risk off the table and put another win in the wins and loss category. So all of our 14 day to expiration trades would stay consistently green with another win for us. So let's close it. We'll release $10,000 in collateral. And there's that. We got that going for us. Yes, we do. Let's run math again, just because this wasn't a great trade at the time. It was only 2.1% because it was $210 on 10,000 collateral. But now the days should give us a nice little return because it was only 5 days ago that we put the trade on. So 210 minus $50. Did you hear a big worm smoke the fool for $50? If you know which movie that's from, leave it in the comments below and I will tell you. You're pretty cool. So $160 divided by 10,000 equals 1.6%, but it was only 5 days ago. Divided by 5 multiplied by 365, that's 116% annualized. So all's well that ends well, as they say. Okay, so that one is off the table, and another 10 G's will go into our buying power. So this May 4th, that's getting close, because I'm eyeballing two things on these 14 days to expiration trades with regard to considering closing them. That is 1% into the profit. So right now, this trade is 41.67% in the profit. The other is a net of $100 per trade per day, because we're rolling these out, building our trade book 14 days out. So if we let them ride, then what will happen is essentially every day we'll be coming up on expirations. But I'm trying to close them out at profit as soon as possible just to remove that risk. We are in earnings season. Once again, the Fed will be meeting and making their rate announcement and all the verbiage they do to sometimes scare us. But if we look at SPY right now, so that's a 424. It's at 411. 411. So we'll let that ride another day. Get it a little bit more into the profit. We've got this credit spread here that's 71% in the profit. What kind of action do we have to close it? So it'd be $15 because we got 5 contracts. It's not going to close right now unless you put in the 3 cents. So that'd be $15 and we collected 35. We just put that trade on 10 days ago. So not a big number in there. It's probably very safe because what is Citi trading at right now? It's at 48.87, down 0.33% today. And it's not a stock that moves around much if there isn't any big financial news like regional banks going out of business. Keep it rolling. We looking. We're trying to check on the profit. Now, this is one I would definitely take off right now because of the dollar bills. I mean, it is 70% in the profit and it's $385. Hello. So it would be how much? 165 or so. So $165. We collected 545 on 10 days ago, April 14th. So let's just close it out. What do you say? I know what you're saying. You're saying, do it, Bart. Close it out. Put that money in your pocket and lock it. So that was, we caught crazy premium that day between that spread. So we released 3250. And let's do the math because this is going to be very nice, right? So 545 minus 165 we just paid to close it, $380 net profit on 3250, right? That's 11.6% in 10 days. So we divide by 10 and then the annualized is going to be something crazy. 426% annualized. We'll take it. Yes, we will. We will take that all day long, all day long, all day, all day. And we increase the buying power a little bit more. Yes, we do. Up to 2.1 milli. Anything else look interesting here? Sorry for the silence. So we got ExxonMobil is at 74%. Let me go to the earnings board. So they report this week on the 28th. When's Valero? Valero's got to be soon too, right? Blown up with Valero. It's the 27th. I think Valero's going to have a fine report, but you just never know how the market's going to react to whatever the report is. So I would not hesitate to close that right now before they report earnings. So we got one contract that's a really wide spread. So let's just say we get it filled at 55. We collected 200 14 days ago. So that's still a nice little return. It's a nice return. Let's just see, what would we have to do? Could we do like 52? Can we fill it at 52? Release 11,000 in collateral. Pretty wide spread, so I don't know if it's going to have the action we need to close that right now. And what is Exxon doing? First, let's update Blackstone. Okay, it updated itself. 88.12 on the Blackstone. So if it keeps drifting down, it gets under 85 this week, I'll definitely be selling puts on that. But ExxonMobil's probably up today. It is up nearly 2%. So probably a good trader would just leave that on, but nobody ever called me a good trader. Yeah. You just crack yourself up. I do. I like to crack myself up. So let's go with replace order. Let's replace the order and see what we have to do to fill it right now, just to get it off our plate and put the money in our pocket. So would we try for 52? Can we get away with 54? Come on. It's got to fill right away with 54, right? Not enough shares. What does that mean? I don't think, did it fill when we weren't looking? I don't think so. Nope, it's still there. It's still there. Let's get back into it and buy it closed. Let's try for the 54. That should work. $54 to close that, release 11,000 in collateral. And just for fun, we got to do our math. You may fast forward through the math. This is what makes me feel good, to know that I'm actually making dollars, $147, and it was 14 days ago, and it was on 11,000, right? So that is a nice, it's a small little return, but when you annualize it, it's going to get very nice. 34.8%. Yep, we'll do that. We will do that and add a couple more dollars to our buying power. Another 11 grand should appear right here. Right there. We did it. So AbbVie in trouble of being called away. Coke being in trouble to be called away. So we'll be managing those this week. The 124 Valero puts under pressure. Yep, very much under pressure. Valero is up today, but not a whole lot. Let's check on it. It's up almost 1%. So it may just keep bouncing into the green all week, which will be better for us to manage that trade. Or if it surpasses the 124, to let those contracts expire at full profit. All right, so I will circle back and we'll look into creating some positions. We closed several of them down, put the dollar bills in our pocket, and I think we have some options to look through on the selling put side. And we do need to also check on the calls, because I have an arsenal of shares and potential contracts on the covered call side that can be put to work today as well. So we'll check back together and do that in just a few minutes. See you in the next video.